In this video, we are going to talk about Microsoft stocks analysis. So before starting this video, please like this video and subscribe to this channel for our future updates. Microsoft Corp. Ticker MSFT, was the most profitable corporation in the world 20 years ago. Microsoft is currently valued at $1.8 trillion, and other tech giants such as Alphabet, Google, and Facebook, FB, aren't far behind. Microsoft, the corporation that gave you Windows, may not be the technological behemoth it once was, but it is far from outdated and remains relevant in markets all over the world. Is the stock of Microsoft still a buy in 2021? Let's take a look at the key pros and cons associated with Microsoft to see if you can add it to your portfolio. A quick look at Microsoft stock. Microsoft's platform became the industry standard for early PCs produced by companies including IBM, and Apple, AAPL. It rose to popularity in the late 1970s and early 1980s, AAPL. Microsoft gained a vital first-mover advantage, which it has used ever since. By the 1990s, computers had shrunk in size and cost to the point that the average American household could afford one. Microsoft's end market was no longer limited to companies and academia, propelling the company to new heights. As home computers became more popular, so did the operating system they ran, Windows, Microsoft's pre-installed program. Consumers praised the Windows user interface and functionality, especially the Microsoft Office suite of applications, which includes Word, Excel, and PowerPoint. Microsoft was able to reach previously unthinkable size in a limited period of time by charging a hefty licensing fee for each machine sold with Windows and Office. Today, Windows is still a big source of revenue for Microsoft. But Microsoft hasn't just sat back and reaped the benefits. Under the leadership of its current CEO, the company has expanded into new and exciting areas such as cloud computing, remote work applications, and video games. The benefits of purchasing Microsoft stock. Since Microsoft's founding in 1975, three CEOs have led the company. Co-founder Bill Gates, 1975 to 2000, Steve Ballmer, 2000 to 2014, and current CEO Satya Nadella. During Gates' tenure, the company experienced virtually unparalleled prosperity, making him the world's richest individual by the 1990s. Ballmer's reign was a struggle, as Microsoft struggled to remain at the forefront of technology, mostly missing the boat on major growth markets like smartphones, search engines, and social networks, which it was well placed to dominate. Since 2014, Nadella has led Microsoft, a time marked by a return to Wall Street prominence, outperformance, revenue diversification, and the company's most important theme, cloud computing. Microsoft has obviously learned a painful lesson from losing out on emerging technologies' potential, and it will not make the same mistakes again when it comes to cloud computing. Microsoft has taken two approaches to the cloud. For starters, it provides Microsoft Office, a suite of productivity tools, as a cloud-based, software-as-a-service offering. Instead of receiving a one-time rebate when purchasing a computer with Windows and Office, customers now pay Microsoft $99.99 per year to use Office across all computers. The Azure Cloud Computing Service is the second way Microsoft is cashing in on the cloud. It's the field's second largest participant, behind only Amazon.com, AMZN, and its Amazon Web Services. Microsoft Azure sales increased by 50% year-over-year in the second quarter of fiscal 2021, fueling a 26% growth in server products and cloud services revenue. Microsoft's Intelligent Cloud segment includes Azure and Microsoft's cloud services, and the popularity of both products was enough to drive the division to a year-over-year revenue increase of 21%. Microsoft's recent $10 billion agreement with the U.S. Department of Defense, as well as more commercial wins with private companies, are expected to fuel the company's development. For example, SpaceX's Starlink project, which aims to carry satellite internet to all corners of the globe, from remote outposts to densely populated city centers, uses Azure as a cloud partner. Though Microsoft's new and rising cloud business is boosting revenues, one of the company's key pros remains largely unchanged from 20 years ago. Microsoft has an incredible moat, or high barrier to entry. Microsoft's Windows operating system has taught many users what they know about computers all over the world. If you don't have an Apple machine, Windows is by far the most common operating system among manufacturers and consumers, accounting for more than 76% of the global desktop market. Microsoft, on the other hand, does not need to release new versions of Windows on a regular basis in order to profit from its operating system. Windows consumer goods and cloud services sales increased 10% in the second quarter of fiscal year 2021. Windows is part of a market division called More Personal Computing by Microsoft, which also includes the Xbox and related services, Surface tablet sales, and Bing advertising revenue. Bing's search advertisement revenue rose a small 2% last quarter, but that's a significant improvement over the 10% loss the division experienced in the first quarter of fiscal 2021. Meanwhile, Surface sales rose 3%, thanks to higher demand for the tablet due to remote work and education, but that's still a far cry from the 37% rise in the first quarter. The Xbox stood out from the rest of the more personal computing category this quarter, which was a mixed bag. Xbox hardware sales increased by 86% in November after the successful release of the Xbox Series X and Series S consoles. Furthermore, revenue from Xbox content and services increased by 40%, leading to a 51% rise in total gaming revenue. These diverse companies, when combined with Windows, boosted sales in the more personal computing segment by 14% year-over-year. Last quarter, Microsoft's final section, Productivity and Business Processes, which includes Microsoft Office and LinkedIn, performed admirably. Revenue from Dynamics 365 increased by 39%, while revenue from LinkedIn increased by 23%. The Productivity and Business Processes segment saw a 13% rise in sales, thanks to strong growth in Office consumer and commercial goods. Microsoft's sales increased 17% year-over-year in the second quarter of fiscal 2021, thanks to solid growth in intelligent cloud, more personal computing, and productivity and business processes. Last quarter, diluted earnings per share, EPS, increased at an even faster pace, rising 34% from the previous quarter. Revenue of $43.08 billion and earnings per share of $2.03 were also higher than analyst estimates of $40.18 billion and $1.64, respectively. MSFT shareholders would be glad that their assets involve a firm as stable as Microsoft after seeing their portfolios take a roller coaster trip in 2020. This takes us to the final benefit of investing in Gates Home: security. For long-term investors, the risk of investing in Microsoft is relatively low. Not only is Microsoft conspicuously excluded from the U.S. government's looming antitrust inquiries into big tech competitors Facebook, Alphabet, and Amazon, but it is also one of only 2 U.S. firms that all major credit rating agencies consider to be a lower default risk than the federal government. That's right. Microsoft and Johnson & Johnson, J&J, are more likely than Uncle Sam to repay your loan. It's difficult to be in a better financial position than that. The drawbacks of purchasing Microsoft stock. What are the drawbacks of purchasing Microsoft stock? These are a little more difficult to come by. The most obvious danger may seem obvious, but in simple terms, MSFT stock may be too expensive right now. Microsoft, like many of its tech peers, had a strong year in 2020, with shares rising nearly 40%, which makes conventional measures like the price-earnings ratio, PE, and the price-earnings-to-growth ratio, PEG, look a little bloated. On the surface, there's nothing wrong with that. Most growth stocks trade at higher multiples than the market as a whole, owing to the fact that their earnings are projected to rise faster than the overall market. The question is whether a trillion-dollar corporation like Microsoft will continue to expand at a fast enough pace to justify its PE of 37.5. Earnings doubled every 2 years or so in the 1980s and 1990s, and it's much easier to go from $100 million to $200 million than it is to go from $1.8 trillion to $3.6 trillion. Another possible danger to be aware of when it comes to FAANG stocks is, if a rival makes a breakthrough in an area where Microsoft could have been competing more vigorously, such as quantum computing, artificial intelligence, smart home devices, or entertainment, it's a lost opportunity. But, unlike the less technologically advanced Balmer, Nadella is much less likely to skip such major paradigm changes. Microsoft, on the other hand, faces heavy competition in almost every market in which it operates. Surface sales will rise, but they're unlikely to overtake the iPad anytime soon. In the near future, Google is unlikely to lose ground to Bing, and while Azure is slowly gaining ground, Amazon remains the market leader. New rivals are always ready to challenge Microsoft's supremacy, with Slack, Work, and Zoom video communications, Zoom, taking on Microsoft Teams, and the new Xbox consoles taking on Sony's SNE, PlayStation 5. The key to Microsoft's ongoing success remains Windows and the Office suite of products. That was true in the 1990s, and it's still true in the 2020s. As long as Microsoft remains dominant in those markets, it will be a viable company with a bright future ahead, but investors should always be wary of new competitors lurking just over the horizon, ready to change the game. The bottom line: should you buy Microsoft stock? The fact that the biggest risk associated with Microsoft stock is simply the normal volatility that comes with investing in equities is a remarkable statement. For a company of its size to not have extreme legal or antitrust woes or hardcore competition threatening its bread and butter cash cow is extremely impressive. The fact that its financial security is considered safer than US bonds is almost without parallel. Microsoft has a great moat in an industry that will almost certainly still be around for a long time to come. On top of that, at the time of this writing, it pays a modest 1% dividend. That's a nice cherry on top of an excellent long-term investment. When you look at the risk versus reward, Microsoft is a phenomenal stock to own. What do you think about our video? Have you got profit from investing in stocks? Let us know in the comments below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.